Technology's biggest test right now could be in the Facebook offering here. Let's get Scott Redler on all of this. Follows this stock very closely, this whole industry very, very closely. What do you think is going on here, Scott? I mean, a lot of people are pouncing on this maybe as an excuse to sell an issue that has gone up fast and furious, led this bull market rally, you could argue, and is continuing to advance, save these last couple of days. And this is the catalyst. Sell on this. What do you think?
Well, everyone always likes an excuse to sell, but this has been a darling for a while, so it is a little bit, it's a little different this time. You know, for the entire public life of Facebook, you know, since it came to market, it's been above the 200-day moving average for about 90% of the time.
Is that right?
So yes,
wow.
Yeah, I'd say 90, maybe even 95% of the time.
Holy cow.
So that means institutions have been supporting this name. That means dips have been bought, especially when it reaches the 200 days. So at the 200 days, when institutions come in, that's the big money, not the fast money, not the momentum money, which is typically the way I trade or the trend that I trade. And that was broken. It was breached yesterday, and then you had a decisive move below it today, below that 170, 171, and now you're seeing downside follow-through. So institutions did not come back and come in and save this name again. So I think now technicians, bigger investors might be looking at the 155 to 157 name, which is still a decent amount below this.
So this isn't over.
It doesn't seem to be. You know, some people thought maybe it would be a fake out yesterday and rally today. That didn't happen. And also, if you look at what's interesting to me also is like Twitter. Yesterday, some people thought that maybe money would flow from Facebook to Twitter, but now you see Twitter down 7-8%. So it's becoming like a sector story, more of a social media story, and Snapchat is down. So, you know, when you have a situation like this that spreads, then other tech names start to get a little worried, like maybe bad news could actually be bad news and not just have the Teflon tech the way we've seen. So yesterday, Neil, we bounced off the 50-day moving average in technology. So if you look at the Qs, that's 165.50, which was good to bounce off of. But in the next day or so, if we break that 50-day moving average, you're going to see some broad-based tech selling.
You know, it's been remarkable following a lot of these stocks, especially when we look at the FANG stocks and elsewhere, Netflix and Alphabet, Microsoft, some of the ones that we're showing that go beyond just them. Every time it looked like that this was their moment to get punched, they come back. Do you get a sense that that could happen here, or is this the beginning of something that investors should pay close attention to?
Well, it depends on your time frame.
Right.
If you trade actively for P&L, you have to get out of the way because if you have a bad month, you're not getting paid. If you're an institution, you want to buy at the 200-day, and you know what? It broke it. We've seen, you know, really strong names in the past break their 200-day and stay in a downtrend for a while thereafter. So even as an investor with the long-term time horizon, you still have to be very careful with any big names under the 200-day moving average, because that means they've lost some institutional support and you can see downside.
You know, Scott, I was thinking so many of these issues dominate all of these tech ETFs and the whole sector funds that have been enjoying the ride given their strong performance, disproportionately weighted in these stocks. What happens then?
Well, today you're seeing some flows go to just say the energy names. The energy names for the past month have been laggards, so today the XLE is up. So they're trying to rotate the money somewhere, but I don't think the market's going to be all excited if it's led by just say the energy sector or industrials. Markets like to be led by tech. They like to be led by innovation and the banks. And right now we're going through a little bit of an identity crisis right here. So that's why the market's a little bit more skittish than it's been, you know, prior this year.
Wow. Scott Redler, really good stuff. Thank you very much for taking the time.
Thanks for having me.